Hi, I'm Dan Danford, and we're doing another episode of Money Made Easy for dadsdivorce.com. We have another question from a viewer of the website. I imagine I'm like a lot of people in today's economy with my home being upside down in value. Is there a way to refinance my house even though I am upside down? Well, that depends a lot on the circumstances. Let's talk for a second about how you got to be upside down in your home. Probably several years ago, you went and bought a home and you financed that in the traditional method. In other words, there was an appraiser that came out and said your house was worth $100,000. The bank decided to loan you the money. Everything was fine until the big recession hit. And now we both know that your house isn't worth that same $100,000. So let's say your house is worth $90,000 today, and you've paid down a few years on your mortgage. So maybe your mortgage has a value left on it of $95,000, and your house is worth $90,000. Okay, that's not a huge issue in terms of refinancing. Also, what's happened during the same period of time is that interest rates have fallen. So you've got a $95,000 loan with maybe a 6% annual interest rate. Today, that same loan might be issued with a 4.5% or a 5% interest rate, and you'd obviously like to reduce to the newer rates. Okay? So my first suggestion is that you make a call to your current lender. Now, here's the issue that they face. They really don't want you to walk away from that mortgage. If you would just walk away from the mortgage, I understand that's not going to be good for your credit rating, but in general, if you did that, they're left owning this house that's now worth $90,000 and you owe them $95,000 on it. So on their books, they're going to be upside down instead of you being upside down. So as a general rule, the banks would rather work with you to continue the relationship than to have to foreclose and take over on that property. So you have some negotiating room, okay? You may not feel like you have a lot, but you have some. So my first call would be to them and to say, basically, hey, I see that there are lower rates elsewhere. I feel like I'm paying a premium rate and I'd like to pay a lower one. But before I start looking around, what can you do to help me out? Now, there's no assurance, there's no guarantee that they will lower their rate. But because they'd rather keep you as a customer than lose you as a customer, there's at least a chance that they will talk to you about renegotiating that loan. And so I would suggest you start there. Now, if they aren't going to do it, okay, then I think you should contact some other lenders and you should just share your story. Like you noted in your question, this isn't an uncommon situation today. They're all seeing circumstances like this. Now, most lenders don't want to loan you as much as the house is worth. Okay? Today, it is much more common that you get an 80% loan than a 100% loan. Okay? So that's going to be a stumbling block to overcome. On the other hand, there are a lot of people in the same boat you are, so there may be other lenders who will help you figure out a way to accomplish what you want. I would certainly look into it, and I wouldn't limit myself to one or two lenders. I would contact a number. Okay? And then determine from talking to them which offers are best. Now, when I say that, I'm serious about analyzing the entire offer, not just part of it. In other words, interest rates are a big part of your cost for borrowing money for a home. But there are also startup costs involved. You'll frequently have to have an appraisal of your home, which costs money. You'll have to have title insurance, which costs money. And some loan originators have what are called points, which are, each point is worth 1% of the value of that loan. Okay? Now, what happens with mortgage brokers traditionally is that is their commission for initiating the loan. Now, if you're working directly with a bank or a savings and loan or a credit union, you may not have to pay points, whereas if you're working with a loan broker, you may have to. All I'm saying is take all those things into account. Okay? Don't just choose the lowest rate. Choose the lowest combination of factors. okay? So it may turn out that one lender has a slightly higher rate than the other, but they don't have a lot of closing costs, okay? Take that into account. That's an important consideration when you're refinancing a house. I guess kind of my summary of all of this is that even though it's become harder to get a loan today than it was 3 or 4 years ago when you probably originated your loan, the truth of the matter is that it's still a very competitive marketplace. There are a lot of lenders out there who would like to take on new loans. And in a sense, your being upside down creates a challenge for them, but it's not a challenge that can't be overcome. Now, the worst case scenario is that you go out and you talk with your lender and you talk with other lenders and you find out that nobody is willing to refinance that loan today. Okay, you're no worse off for having initiated the conversations than you are today. You might as well check into it. On the other hand, even if they say no, I mean, it's just the law of how real estate works, is eventually the value of your home will rise back up to where it was when you purchased it. And each month you make a payment on your mortgage, which brings down the principal value of that mortgage. So even if you can't refinance it today, there's a really good chance that you'll be able to several years down the road. So you aren't hurt by trying, and eventually you'll be in a better position. I encourage you to look into it because rates are at their lowest that they've been in decades, okay? So if you have an opportunity to refinance any debt, today is a good time to do it. But like I said when we got started, probably the first call I'd make is to the people who own your mortgage today, just to see if they'll be willing to work with you. Hey, good luck on this. Let us know how it works out. That's it for another episode of Money Made Easy. We'll see you again next week.